Right. Hello, everybody, and welcome to our little webinar. Ross and myself are going to be talking about practice of valuations. And maybe if I open up by sort of giving you my view as to what the situation is like, and then to discuss it further with Ross. My view really fundamentally is that we were heading for a price correction anyway, that the valuation of private practices, and I'm principally talking about private practices, was reaching a kind of a point where they weren't actually representing incredible value for money. There was no sort of potential for growth in terms of value. And also, I think there were some difficulties starting to arise in terms of obtaining funding for practices. So, you know, when the multiple had moved up to 8 and 9s, which they had been doing, and I'm very happy to say that some of my clients were able to sell at that sort of level, you know, I think there had to be a point where that was not going to be sustainable. So I think it was probably going to get sort of brought down a little bit. And that was partly related to the fact that I think people were beginning to realize that quite a lot of dental practices actually are in the wrong location, and that in order to increase their earning potential, they would have to relocate. And so there was then a very strong argument, and I'm sure Ross will sort of agree with me, that probably in a lot of instances it might be better to buy, to set up a squat in a high traffic retail unit than it might be to actually buy an existing practice. But let's leave that for the time being. And let's try and sort of look forward and try and imagine what values are going to be like. And I must admit, I've been slightly, well, annoyed is probably the wrong word, but irritated by some of the webinars I've seen where, you know, valuations have been sort of mentioned, and people have sort of indicated that, yeah, there might be a slight sort of hiccup, and but they'll come back quite quickly. Don't worry about it. I honestly think that's absolute rubbish. I don't think it's based on any kind of business logic whatsoever. You know, we have to be realistic. The value is based on the profitability of something. And the profitability of dental practices has been great, has been absolutely amazing, but it isn't going to be in the future, because in the immediate future, we're going to have to learn to run a different type of business. The cost of delivering dentistry is going to increase, whether we like it or not. We have patient journey that's going to be longer and more complex. We also have delay times in terms of the amount of production we can get out of the surgery. And the conservative estimate is that we're going to lose an hour a day, maybe 90 minutes a day. And if you've got 4 surgeries, that's a lot of production time per day that you're going to lose. And that's going to inevitably affect profitability. I'm sure we can do things in terms of adjusting associate salaries and, you know, being tougher on our sort of cost base. But I think we have to accept the fact that businesses just aren't, dental practices just aren't going to be as profitable as they have been. And if they're not as profitable as they have been, then the multiple is obviously less important, but the multiple will come down as well. The reason the multiples have been high is because the profit yield was going to be so high. Profits down, multiples going to come down. So do I think a practice that was worth £1 million in February is going to be worth £1 million in October? No. I think it's going to be worth about £500,000. That's what I think. What's your view, Ross?
Well, I suppose, again, just to kind of build it from the foundations up, you know, my belief, or actually the fairly accepted formula is, as you say, the profit times a multiple. And I'm with you on the profitability. I can't see how it's not going to be adversely impacted. And we'll leave the kind of the NHS versus private as a debate for another day. But, you know, universally across the board, there's going to be higher costs, longer treatment times, and that is going to affect throughput and by implication profitability. I think there's a few people kind of thinking, or you know, trying to assess how long until it reverts back to the normal, if that makes sense. But I don't see that it, you know, necessarily will revert to pre-COVID situation. So anyway, you know, the first item in the formula is the profitability. The second item is the multiple, and you know, that's inherently a function of supply and demand. So, you know, it's difficult for me to predict, I suppose, but again, I can't see an environment where there's going to be quite as much demand for practices. I think there will still be demand there. So I'm probably not at 50% like you are, but I just see there's going to be less demand occurring, and
well, maybe demand is going to be much more selective for us. I think that the nice big practices are always going to sell because the corporates are always going to want to buy nice big practices, and they can afford to be selective now. And I would imagine any practice that's doing, comfortably over $1 million, a private practice in a good location, is always going to be a prized acquisition for a multiple. So I'm sure those kind of practices will continue to sell in the same kind of volumes. Not for the same price, but they'll certainly sell. I'd say the difficulty is in the smaller practices.
Well, I've heard commentary that as much as 90% of practice buyers are now, are non-corporates, private individuals. They're obviously driving a good proportion of the supply and demand curve. And the interesting thread, and it's genuinely I don't know which way it's going to land, is that are you going to get more associates who might have a suppressed pay plan looking to buy their own practice to preserve their salary in a kind of a perverse kind of way?
Yeah, I think that's a really good point, but it still doesn't sort of get around the fact that the inherent profitability of a practice is going to take a hammer. Banks are going to look at the sort of the serviceability of any kind of loan. And the other thing I'd say is that instead of being a seller's market, it's now a buyer's market. So anybody wanting to buy something is in a position of great strength. 3 months ago, if you had a practice for sale, you probably had 10 or 15 people that were potentially interested in it and had the funds or likely to be able to get the funds to be able to do the deal. I think on a lower profitability in a business, I don't think it's going to be that easy, to get the funds, but also I think the risk for the associate, I take what you're saying, if associates earnings potential goes down, then of course they want to run their own shop, but the risk is obviously higher because the profitability won't be there to the same extent.
Yeah, I mean, on the flip side, there's nothing worse than buying your own practice to preserve your own income and finding it's not the kind of golden goose that you thought it was.
Yeah, as is often the case. Yeah. It sounds quite gloomy what we're saying, and I suppose it is if you look at it in the short term, but if you look at it in a kind of longer period of time, and accept the fact that dentistry's been this charmed type of business area that's been, absolutely brilliant at making money. Even really naff practices make money. Even bad practices make money all the time. But in the new world, that won't be the case. The bad practices will just go bust. Like a shoe shop that's a bad shoe shop goes bust. Bad practices will go bust. But the opposite to that is that the people that are good at running practices will bring the profit back. They will bring it back to the same kind of level. They will run the business as a business instead of...
You mentioned a very interesting item earlier about how a lot of practices are located in the wrong, the wrong part of town. It's very difficult to kind of swallow a pill when you bought a practice for, let's say, £1 million, and then someone comes along and says, actually, it's in the wrong location. I know it's got this trading history, and I know it's done very well for the last 10 years or so, but going to need you to spend another 250k to relocate it. How kind of fixed are you on that opinion?
Well, I'm very fixed on it, really. And in fact, I've got, I feel even more confident about it because retail rents are certainly by this, the last quarter of this year, retail rents will be somewhere down there. They'll be extremely low. The incentives will be high to get businesses in, dental practices or whatever, into shopping centres. So, yeah, I still think it's going to be a better deal to relocate the practice ultimately than to suffer a poorly located practice. It also cuts down the likelihood, and there will be, I'm sure, increased likelihood of disruptors entering the market, dental disruptors, and actually stealing part of that business from that nice established practice that's not quite in a retail setting, but is in a nice location. But somebody opens a retail unit next door to a Costa in the same town for fairly low cost now. I mean, there's no big bucks here apart from fit out, and that can be funded quite easily. I'd probably say maybe the best idea is not to buy those practices and to actually open up your own squat in a retail unit if you've got the wherewithal and the confidence to do it.
Can be perceived as being riskier to the buyer who's thinking about it.
It is. I suppose it is, because the other one's actually making money and performing. And also, I think it's only fair to say the banks will be more likely to loan you money on an existing trading asset than they will on a pipe dream, which is that shell over there that I'm going to turn into a fabulous dental practice. But I think, banks are going to squeeze at both ends. I think there's going to be, it won't be as easy to get the funding for a trading practice as it might have been, because banks, like everybody else, are aware that the profitability just won't be there to the same extent. The revenue will, I don't think there's any issue about the revenue because the demand is there. The revenue's going to come back fairly quickly, fairly reasonably. The profitability is going to lag. And the skill has to be in turning your revenue into profit. And you may need help to do that.
Well, from my experience, it usually was. There was, during any kind of sale process, there's normally a creative exercise where you'd kind of talk up the profitability. But if you look at it through kind of transparent eyes, if I were to pick any kind of, just a random practice in the UK, by the time you paid the principal for the hours that they put in, the profitability was usually quite modest. So, and being very generic, but as a general class, dental practices are low profit enterprises. They, you could talk up the profitability and add back certain things, and build upon the supply and demand that was occurring previously. But intrinsically, they were usually vehicles for what's kind of known as an owner occupier in the agent space.
And that's why somebody would buy them, because they would see the fact that the practice was under leveraged, and that if they introduced some additional treatment modalities and they increased the opening times, that they could grow a business fairly easily, because they had a stable base of core income of 800, say 850, and they could comfortably grow it up to 1.2 over a year, 2 years. That wasn't unreasonable. We've done it many times, Ross, haven't we? It is a fairly sort of well-trodden path. I'm just saying that I don't think it'll be anywhere near as easy to do that in the future, because the the revenue will go up, profitability will be the issue.
Will the rule book be similar looking then, to a certain extent?
I think there'll be much greater understanding of profit management that isn't naturally inherent. Naturally, understandably, the priority in a practice is the quality of care and looking after the patient, and that will always be the case. But there's been less emphasis in terms of understanding the profitability of the business and the actual cost base of the business, and how they sort of mobilize the cost base to yield a greater profit.
So if you had a client pre-COVID, let's say 12 months ago, and you had a plan to prime them for sale, let's say, or whatever their own specific plan might be, your playbook that you kind of keep under lock and key would have had a financial element in it, wouldn't it? So to that extent, those are plays that you do have in your playbook, probably just more of an emphasis that they come out earlier on in the process.
Yeah, and they get more importance. They actually are more important in the mind of the principal, or the owner of the business, and that they really understand the margins and the movement on margin from different treatment types. They understand the sort of situation with hygienists and patient plans, and how we kind of don't properly manage the profitability of those patient plans and the hygiene appointment and the appointment with the with the dentist. You know, those kind of issues are going to become much, much bigger. Because hygiene, I think, is going to be a real area of concern.
Well, there'll probably be, you know, a list of 57 different things that you kind of ignore before.
Yeah.
But actually, we are going to have to deal with them now. We are going to have to deal with, you know, patient plans. We are going to have to deal with ADY performance. We are going to have to deal with hygiene. We are, you know, they're all important in the context of making sure we get every last kind of degree of
It's not one thing, is it, Ross? There's always, you know, there's always about 20 or 30 different elements that actually gives you your profit.
Yeah, but I think, you know, that's it. It sounds like hard work, I suppose, is the answer, that you have to deal with 57 different things now. With previously, it was let's grow it a bit. It kind of sounds a bit sexier, a bit easier to a certain extent. But actually, now you've got to get down and dirty in the weeds. Is that right?
Yeah, and keep your eye on the cash, because, you know, cash flow is now going to be one of those things that dental practices talk about. They never talked about it before, but, or to any great extent, but they're going to have to get serious about their cash, particularly for this first year coming back.
Well, I do agree. You know, it was always, you know, it's been lightning how many people are engaging on the financial side over the last 3 or 4 weeks. It's, you know, I've always enjoyed it, but you know, I think it's now the new normal. If that's not a too kind of corny a phase, I think the financial director should be, you know, should have a contribution to play at every board meeting of every practice.
Yeah, I agree. So for the people out there who may be watching this, what's our advice? I mean, we've sort of pricked their balloon a bit, perhaps, but we need to recognise that for the good practices, for the disciplined practices, there is a return to the same level of profitability. It's not going to happen in the first year or even the second year. It'll probably take 3 years for the good ones to get back to that sort of level. But I think our message to them is, you need advice to be able to do that, and you need discipline as well. You need to have formality in the business that reports the financial performance every 4 weeks, and you need to know really your numbers. But you need to always know your numbers.
Yeah, I think dentistry is reformatting itself. I see it as, you know, a purging to some degree, but, you know, great new opportunity to you know, probably to implement some of the ideas that maybe you hadn't done before, to maybe relocate, as you're suggesting, if you've been chewing over that idea, to future-proof yourself, to use another kind of corny phrase. But, you know, we've seen great success in the retail format locations that we've worked together on, and that, you know, there's some sense to that. I suppose it's a bit of an acknowledgement that you can't continue the way you did before. And if you've got an awkwardly located, you know, narrow corridor, so patients kind of have to brush up against each other on the way in and the way out, it's probably not going to be acceptable now.
Exactly. Yeah, I'm sure there'll be lots of components that will have to change, from physical to reporting to the attitude of the team. Lots of things will get impacted, I'm sure. Ross, thank you very much. I hope it's been helpful to everybody. It's been nice to chat about it. If anybody wants to contact us for advice, please, it's finecompany.com. Feel free to send us an email. We're happy to talk to you at any time. Thank you. Cheers. Bye-bye.